Welcome to this explainer. Today, we're taking a pretty dense, highly detailed property training manual and completely transforming it into a clear, actionable guide for you. We're going to explore Singapore's unique real estate ecosystem together. So, whether you're looking to buy your very first home or you just want to understand the actual nuts and bolts of property investing, this explainer is going to decode the rules of the game for you. Let's get right into it.
Okay, let's dive into this. Here is our agenda for today. Moving from the macro level all the way down to the micro, we'll cover 1. The DNA of real estate. 2. 3 ways to invest. 3. Inside the property market. 4. Private property in Singapore. And 5. Public housing in Singapore.
Section 1. The DNA of real estate. What makes property different? Now, you might be wondering, what makes real estate totally unique? To truly understand property investment, we first need to just kind of strip away all our standard assumptions. Think about it. When you buy shares on an app, you're essentially buying a standardized piece of paper, right? But when you buy property, you are buying into physical and economic laws that simply don't apply to any other investment. It's a whole different ballgame.
First up, real estate is heterogeneous. Honestly, that's just a fancy way of saying every single property is completely unique. Even if you have 2 identical semi-detached houses built literally right next to each other, one might face a lush, quiet green park, while the other catches the noise of a busy highway. Second, it's immobile. You can't exactly pack up your land in a suitcase and move it to a better neighborhood. Third, it is indestructible. A house might get torn down, sure, but the geographical footprint of the land, that remains forever, which is why you're really buying the land itself, not just the bricks. And finally, it's indivisible. Outside of some very specific legal setups, you can't just chop a house into little pieces and hand them out like party favors.
So, all of those physical traits lead us right to the ultimate economic characteristic of property. We've all heard the golden cliché, right? Location, location, location. In economics, this is called area preference. Because land is immobile and entirely unique, human choices about where they actually prefer to live, driven by things like infrastructure, jobs, and community, massively influence a property's value. A similarly sized condo performs vastly differently depending on whether it's sitting in District 9 or District 23. Section 2. 3 ways to invest: direct, REITs, or stocks. Now, what's really interesting about this slide is that when we look at your investment choices, a very clear divide emerges. If you buy direct property, you need a massive starting cost for a down payment. The asset is highly illiquid, and you have to manage it yourself. Fixing leaks, dealing with tenants, the whole shebang. But look at the liquid alternatives: real estate investment trusts, or REITs, and property stocks. Both of these actually solve the massive starting cost and illiquidity problems of buying direct property. With just some small savings, you can buy shares in a shopping mall you probably visit all the time, like Suntec City, and you can sell those shares on the stock exchange on the exact same day. Plus, professional management handles all the actual building maintenance for you.
But wait, we do need to distinguish between those 2 liquid options. The absolute crucial point here is how they handle your returns. REITs in Singapore are actually mandated by the tax authority, IRAS, to distribute at least 90% of their taxable income back to investors as dividends, so they can enjoy tax-exempt status. That makes them a fantastic vehicle for steady, predictable income. Property stocks, on the other hand, where you're buying shares in the developers themselves, well, dividends aren't guaranteed there. You really have to put your detective hat on and do strict homework on the company's management capability, overall market sentiment, and the macroeconomic demand.
So, you might be wondering, with all those upfront costs and management hassles, why do people still buy direct real estate? Well, it produces a really consistent hybrid return of steady rental income plus capital growth. It's a fantastic hedge against inflation, too, since property values tend to rise along with general price levels. But more than that, it's tangible. You can physically touch it, you can live in it, and in a land-scarce country like Singapore, it provides a profound sense of security and a real, undeniable pride of ownership. Section 3. Inside the property market: imperfections and inefficiencies.
I always kind of thought market inefficiency was a bad thing, but for a prepared investor, it's actually where the magic happens. Because property isn't standardized and transactions aren't centralized, there is information asymmetry. Basically, not everyone knows everything. This means that if you do your homework and gather special information or expertise, you can uncover golden profit opportunities that simply wouldn't exist in a perfectly efficient, frictionless stock market.
The mechanics of this imperfection are pretty straightforward. First, there's no central real estate exchange. The transaction costs are high. You're paying buyer stamp duties, solicitor fees, and agent commissions. It also takes a long time. An average resale transaction takes somewhere between 4 to 6 months to complete. And perhaps most importantly, the supply is inelastic. In a land-scarce country, if demand suddenly spikes, developers cannot just snap their fingers and create instant supply. It takes literally years to build a new block.
Section 4. Private property in Singapore. Bungalows, condos, and controls. Let's move to and see how this builds specifically into Singapore's private residential landscape. When it comes to private residential properties, the absolute pinnacle of the market is landed housing. This ranges from terrace houses and semi-detached properties all the way up to detached bungalows. But the absolute crown jewel of Singapore real estate, the good class bungalow, or GCB. These are ultra exclusive. They are restricted to just 39 designated areas in the entire country, places like Nassam Road and Cluny Hill. To even qualify as a GCB, the plot size must be a massive minimum of 1,400 square meters. It's a whole other level. Now, if we look at private non-landed properties, we really have to clear up a very common confusion, the difference between a condominium and an apartment. In Singapore, this isn't just semantics, it's a distinct physical and legal difference. A true condominium actually must sit on a minimum site area of 4,000 square meters. Because of that large size, they can offer generous communal facilities. Think big swimming pools, tennis courts, and full-scale gyms. Private apartments, however, sit on much smaller plots. They might just have a tiny pool or maybe an auto gate instead of 24-hour security, making them generally more affordable but lacking those expansive lifestyle amenities of a full condo.
Now, a critical factor shaping this private market is the Residential Property Act. Singapore heavily regulates foreign ownership to ensure housing remains accessible for its citizens. According to our source material, foreigners generally cannot purchase landed properties. And yes, this even includes strata-titled landed homes like townhouses and cluster houses without special, prior approval from the Land Dealings Unit under the Singapore Land Authority. However, foreigners can freely purchase non-restricted properties, like your standard condominium units.
Section 5. Public housing in Singapore. Home ownership for the nation.
Okay, I want you to just let this number sink in for a second. 82%. It's almost hard to wrap your head around, but as of mid-2024, out of a total population of 6.04 million people, an estimated 82% of Singapore's residents live in public housing flats built by the HDB. That is a colossal footprint, and it's driven by a very conscious, deliberate government effort to build a nation of owners' homes. The evolution of these flats really tells the story of the nation's progress. Back in the 1930s, the Singapore Improvement Trust began basic housing schemes, which were eventually replaced by the HDB in 1960 to tackle massive housing shortages with just basic shelter. But look at how those expectations shifted over time. In the 1970s, standard designs were updated to include bathrooms attached to master bedrooms, huge upgrade. In the 1980s, responding to a growing middle class, the HDB launched larger executive flats. And by 1997, they were introducing studio apartments specifically designed for the elderly. The focus shifted entirely from just providing sheer quantity to engineering a really high quality of life. And that evolution led right to an incredibly unique hybrid class of property, the Executive Condominium, or EC. These are specifically designed to bridge the gap. They are built and sold by private developers offering the exact same swimming pools and gyms as private condos. But, and this is key, they are subsidized and governed by HDB eligibility rules, so they cater perfectly to young graduates and professionals who earn a bit too much for a standard HDB but might currently be priced out of the fully private condo market.
So what does this all mean? We've gone from the unbreakable physical laws of land right down to the specific blueprints of Singapore's housing. You've seen the market mechanics, the inefficiencies, and the exact tools you can use to invest. So I want to leave you with this question. After navigating this explainer, are you drawn to the instant liquidity and passive income of a REIT? Or does the tangible pride of direct, physical ownership call your name? With all these options, what's your next move in the market? Think about it. Thanks so much for joining me, and keep learning.